Knowing what should happen after each signal or pattern allows a candlestick investor to have a huge advantage for being able to analyze the direction of the market trend with an extremely high degree of profitability and probability. For example, the other day, Thursday, we closed back below the T-line, making a good probability that the upside resistance level was going to act as resistance once more. However, Friday needed to open lower and trade lower. Friday opened and immediately started trading higher, doing a bullish engulfing signal, which negated the bearish engulfing signal of the previous day. This would have meant that anything that you had closed out on Thursday, you could be rebuying on Friday, providing it was providing a good pattern. Today, we had an indecisive trading day, both in the NASDAQ, the S&P 500, as well as the Dow, doing kind of a Doji spinning top type day, which makes our analysis very simple. They're going to move in the direction of how they open it after the Doji. If they start opening positive tomorrow, we know we have a Doji sandwich, and we know the implications of a Doji sandwich, that they're probably going to break out through this resistance level. On the other hand, if they open it lower and start trading it down, that tells us they failed at the resistance level. Now they've got the potential of doing an evening star signal at this level. Still time to start coming out of long positions that show some traces of selling. Having simple scanning techniques and identifying the bullish signals, such as the bullish engulfing signal on GOGO, G-O-G-O, on Friday, told us that we could be buying or buying on positive open the next day. Does every single buy signal represent a strong probability of trading higher? Not necessarily a probability of trading higher, but rephrase that. Yes, a high probability that's going to trade higher, and with a possibility that you're going to get some big price movements out of these type of signals. The reason we're looking at candlestick signals and patterns today is because over 400 years the Japanese rice traders identified high probability investor sentiment setups, and they did it on a graphic basis. Notice the little morning star signal here in VPHM, with the announcement today bringing the stock up 25%. Does that always happen? No, but witnessing these type of signals and patterns puts you in situations where the probabilities of being in that type of situation is extremely high. So when we see that same type of pattern setup, notice in Kendai, KNDI, how we've had a morning star type signal, a gap up from a Doji, a close above the T-line, a close above the 50, and a breakout from this area. These are all indications, especially with stochastics in the oversold area, that we're probably moving higher. And with a Doji gap up, not moving higher on a moderate pace, but probably with a very strong price move. This is nothing more than putting common sense investor practices into a graphic depiction and showing patterns that have worked consistently over the last 400 years. That'll be it. We'll see you in the chat rooms.